Hello and welcome to Focus On with myself, Afifi Peters. In this episode, we are focusing on investing in Africa, a continent of over 1.4 billion people and a combined GDP of 3.4 trillion US dollars under the Africa Continental Free Trade Area deal. To share insights on how foreign investors are perceiving the continent, we spoke to Ian Carton, who's the head of Client Coverage International over at Standard Bank. Africa as a talking point at WEF. If you can just share your impressions of some of the comments that are being made and the sentiment that is being expressed by some of the global investors on the stage.
Indeed. Well, Africa has definitely got an elevated audience here this year. It started last year with the African Continental Free Trade Agreement and its partnership with WEF, an intentional effort on both their parts to raise the consciousness of Africa at WEF. It's been very evident here with the corporate presence and the meetings that we've been having and the panels we participated in that Africa is a definite talking point here.
I'd like to understand how that talk could potentially be translated into action. Just in your view, where are you seeing corporate participation or interest to want to participate more in Africa?
Well, if I look at where we are at the moment within our corporate and investment banking business, over a third of the revenue that we make from clients comes from global multinationals who are already operating in Africa. And whether that's Chinese, European, Middle Eastern or US, it's a significant activity. And the shift we've seen in the dominance of what was originally more South African in that revenue mix has shifted to it being predominantly sub-Saharan African. So I think there's already significant corporate activity. We had a panel yesterday in which we talked about the risks, and with risks, and of course there are risks investing in Africa, there is significant opportunity. And when you look at things like the Continental Free Trade Agreement, the area, the size of the consumer market that's going to be, the participation of countries, it is opportunity, significant opportunity.
So let's maybe unpack the risk a little bit, because ultimately when you are investing, you're looking for a return that pays you for that risk. And I think that it is public knowledge that some of the risks on the continent pertain to liquidity and the ease of getting your money in and out. There's inflation. We are seeing it in the double digits in certain parts of the continent still. So just talk to us about your message to some of your clients or even potential clients about circumventing risks on the continent to be commensurate of return.
I think there's a great awareness amongst the governments, the politicians and the corporates of the risks. Stability is what everybody is looking for at the moment, and there's an acceptance, whether it be the Nigerian government who's present here at the moment, the South African government, there's an acceptance that there are significant risks and there's an onus on the governments to provide the stability, the regulation and the liquidity. What we've seen in Nigeria since the election is a significant number of policy shifts that have made it easier and will make it easier to attract capital in and to take capital out again.
And again, circling back to your comment on the Africa Free Trade opportunity, the Free Trade Area deal that seeks to combine the continent, boost the level of intra-Africa trade and ultimately growth and jobs. It's been slow so far in terms of implementation, but maybe again just to flesh out the potential opportunity that the AFCFTA could bring once it really gets up and going.
Well, the scale, it's the consumer market is the obvious attractiveness to international multinationals. However, it's also the ease, the friction. You talked about some of the risks and the barriers to trade and logistics. So removing those barriers, we've got a continent that's divided into a significant number of countries. Removing the barriers and that prevent the flow of goods and capital between those countries is a significant opportunity as well. You say it's been slow, but it was only formally came into being in 2021. And there is significant progress. His Excellency, the General Secretary, is here, has participated in a number of panels. We've had 2 presidents who've been participating in panels here. So I think it's recognized that with that greater scale and with the reduction in the friction, the trade opportunity, the movement of goods, the logistics, it's a significant opportunity.
That was Ian Carton, the head of Client Coverage International at Standard Bank. The chairperson of Africa's largest lender by market value also shared her views on the perceived risks and opportunities of doing business on the continent. This is what Nonkululeko Nyembezi had to say. Nonku, thanks so much for your time. I do know that you have been participating in quite a number of discussions at the World Economic Forum. By virtue of you representing a bank, I imagine that financial inclusion has been one of them. But perhaps let's just start off with the top-level view of your impressions of this year's WEF and also your interpretation of the theme, Rebuilding Trust.
Look, I think we have financial services is always very, very well represented in the topics that are offered at the World Economic Forum. So in the one session that I did was on resilience. And I suppose if you think about COVID and the post-COVID recovery, it becomes important, although the part I was covering had much more to do with how do we actually, going forward, avoid debt crises in low-income countries. So that was really the theme. And for me, that was quite an important one to get across. What needs to be done? What could be done, realistically speaking? I also participated in one on financial and digital inclusion and was a very lively debate about how we can accelerate broadband in markets. How do you service communities, not just countries, but low-income communities within even rich countries? And so that one was actually very, very lively, a lot to learn from what other people are doing. But just lifting the lens a level, there is no question that this Davos was about AI. I just listened to Sam Altman and the rest of the panelists talking about what they see in the future and what this powerful new tool is likely to open up by way of opportunity across sectors. But obviously I'm listening far more for the sectors in which I'm involved. Been a really, really exciting Davos for that reason. If you just think about the healthcare impacts of this, in fact, the global CEO of Pfizer called it almost a renaissance for the life sciences industry. That's how big he thinks this collision between the innovation in biology and technology is likely to result. So you're no longer talking about discovery of drugs, you're talking about design of drugs. So it's, the people are saying it's going to change everything, but of course we've been here before where a new technology gets everybody so excited, you think it's going to change everything, but people are thinking that this is the one.
So let's talk about AI then. Just your reflections as a bank, how you're thinking about it and integrating it a lot more in the Standard Bank Group. Because I think a lot of people are talking about the fact that 2023 was a watershed moment for artificial intelligence and ChatGPT, to be specific. A lot of the experts in the field that I'm listening to are saying that 2024, the watershedness, as it were, is not even over. There's a whole lot more that's expected in the space. How are you thinking about it, just at group level? And more specifically, how are you thinking about perhaps amplifying its role to solve for some of the development challenges?
Well, let's talk about regulated industries in the first instance and banks in particular, because the kind of information and data that we process has a heightened level of scrutiny and additional regulation on it. It's people's personal data. So I don't think you're going to see very many banks rushing to be first in line. We need to think about it a little bit more carefully than, say, a technology company might do, for instance. It's actually quite important to remember that banks have been using predictive AI for many, many years. It's the generative part that is new. So a lot of sandboxes being created internally, looking at small LLMs to see how we can do this without, teach these models with our own data to do the kinds of things we want to do. It's very easy to see how we can follow the rest of other sectors in common areas like for example, HR. That's very much taking out the drudgery in some of the HR processes. But once you're talking about deploying this powerful new tool for sales and marketing, for example, I mean, personalization of client journeys has been something that the banks, particularly Sana Bank, has been working on for a long time. Suddenly we can really do that with this using our own data. So I think what you should expect to see is a lot of experimentation going forward. In fact, it already started. But there is going to be, I think, a slower rollout in banks because we need to be so cautious about our people's data. In fact, one of the sessions I attended that was anchored by IBM and McKinsey, we're actually talking about cybersecurity and AI because clearly it can be used on both sides. And if I think about the level of fraud that was rained upon us last year, I just see that exponentially getting worse with these brand new tools that people have got because they can be used for good and ill. So there is that. So there is a need to be extremely careful. We don't need to be first, but we don't want to be last either. This is the one big wave you cannot afford to be left behind because competitively it might work really, really badly for us. In the African context and development in particular, it was so interesting listening to the Minister of Communications from Rwanda talking about Rwanda starting to put all government services online. By June 2024, any service that a Rwandese needs from its government, they can get online because they have now done the laying of the broadband infrastructure. They've been very mindful about the devices people can use. And I wasn't even AI. It was just, just technology being deployed. Now we have the opportunity to also then use AI to fast track those sorts of things in healthcare. So I think we just need to be very close to the government people who are thinking about this thing because in South Africa, I'm seeing very much from government as to how they see this working for us development-wise. But I think when it comes to that, it does seem to me to be the one area that has to be led by the government. They must show us the way.
That was Nonkululeko Nyembezi, the chairperson of the Standard Bank Group, helping us wrap up this episode of Focus On with myself, Fifi Peters. Thanks so much for watching. Until next time, it's goodbye.